Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing that reads like a company is on thin ice, but is trying to convince everyone they're still strong. Let's see if we can crack the code. Before we jump in, if you find value in these deep dives into corporate filings, make sure you are subscribed. And hey, we've got a growing community over on Discord where we break down these reports even further. The link is in the description below. Our main focus today is a notice from the Nasdaq, the big stock exchange, telling the company they're not playing by the rules anymore. This is a report filed with the US Securities and Exchange Commission, or SEC, which is like the referee for all publicly traded companies. The company Modus Holdings Incorporated is filing what is called a Form 8. Think of this as an urgent update. Something important has happened that investors need to know about right away. And the big news is that Modus Holdings Incorporated received a rather stern letter from the Nasdaq's Listing Qualifications Department. This filing is signed by William Alessi, the President and Chief Executive Officer, on the 16th of January 2026. He is the top boss, so he is clearly aware of this critical situation. Now, the main event here is about something called delisting. This is when a company's stock is removed from an exchange like the Nasdaq. It is a serious blow. The Nasdaq has a rule that companies must keep their stock price above a certain level, specifically $1 per S-share, to stay listed. On the 12th of January 2026, Modus Holdings Incorporated found out they are not meeting this crucial requirement. The Nasdaq noticed that the closing bid price of their common stock had been below $1 for a sustained period. Specifically from the 13th of November of last year all the way to the 9th of January of this year. This notice is about their class of common stock, the main type of stock people buy and sell. The good news, if you can call it that, is that the Nasdaq is giving them a grace period. They have until the 13th of July 2026 to get that stock price back up to at least $1, and it needs to stay there for 10 consecutive business days. It is not just the common stock either. They also have redeemable warrants, which are like options to buy stock, and these are also subject to staying listed. The rules are about maintaining a healthy market for their shares. The prices are in US dollars, of course. So the big goal is to hit that $1 minimum bid price and hold it for 10 days straight. If they do that, the Nasdaq staff will confirm they're back in compliance and this issue will be put to bed. But what if they don't? The filing mentions a potential second chance. If they fail to meet the deadline, they might get another 180 days. But they would have to show Nasdaq they plan to fix it, possibly by doing a reverse stock split. A reverse stock split is basically where a company reduces the number of shares outstanding, which artificially increases the price per S-share. It is often a sign of a company in trouble. Now, it is important to note that receiving this notice doesn't mean the company stops operating or reporting to the SEC. They still have to do their normal business and provide their financial updates. The company themselves are laying out the grim reality if they do get delisted. First, it would make it much harder for people to buy and sell their stock, meaning it loses value. Second, fewer people would want to invest, making it tough for the company to raise money for new projects or to keep its operations running smoothly. Third, they wouldn't be able to easily sell new shares to the public. And finally, it would make it harder to give stock as rewards to their employees, which is a common way to attract and keep talent. This section is a standard legal disclaimer. They're saying that any predictions they make about the future, like whether they can regain compliance, are just based on their current hopes and beliefs. And they are warning everyone that the actual results could be very different from what they're saying now. It is a way for them to protect themselves legally if things don't go as planned. They admit that a bunch of things could go wrong. They might delay their financial reports, they might not be able to fix the price issue, or they might even break other Nasdaq rules. They also mention the possibility of their appeal being denied. This really highlights the precarious situation they are in. So, what is the big picture here? Modus Holdings Incorporated is in a tough spot. Their stock price has fallen significantly, putting their listing on the Nasdaq at risk. They have a deadline to fix it, and if they don't, the consequences could be severe, impacting everything from their ability to raise money to attracting employees. While they express confidence in regaining compliance, the very fact they're issuing this 8-Hey, which is for urgent material events, signals a crisis in the making. The company's strategy, whatever it is, has not translated into market confidence. They are relying on a short-term fix like a reverse stock split, or a significant market turnaround to save their listing. The future looks uncertain, and investors should be very cautious. Alright, that is our breakdown of Modus Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can pull off a comeback, or is delisting inevitable? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and make sure you subscribe for more deep dives into the corporate world. And don't forget to join our Discord community, linked in the description for more real-time insights. Thanks for watching, and we'll see you in the next video.